Now, we got an interesting deal taking place here today with President Trump being joined by CEO of Ripple, Brad Garlinghouse, in the White House, along with other crypto executives. SEC Chair Paul Atkins and CFTC Chairman Mike Seelig will be in attendance as well. That's going to be taking place here in the next couple hours. But at the same time, we just have an announcement from the Treasury that they're going to be doubling the amount of long duration treasuries that they are buying back in their liquidity supporting buyback operations that have already started and been underway. Remember, this is the QE that we don't call QE or quantitative easing. And as I've been saying, they have 589 different ways that they make this money printer go burr, which at the end of the day, that's exactly what this is. It leads to inflation, it leads to a backstop, and it leads to kicking the can down the road. But what's interesting about this news coming out from Treasury today is it's after yesterday we just saw Ripple Prime announced that they raised $275 million dollars in the bond market. So we're going to tie all this together for you guys here today. Crypto's starting to move back up this morning. We have the full meeting taking place here at 2:30 p.m. Eastern at the White House. And here's the full list from Eleanor Terrett. We have SEC Chair Paul Atkins, Chairman Mike Seelig, Brian Armstrong from Coinbase, Brad Garlinghouse from Ripple. You got Arjun from Kraken, Cameron and Tyler, the Winklevoss twins from Gemini, Sergey from Chainlink, Chris Dixon from A16Z, Elena from Paradigm, BitGo, Digital Chamber, Cody Carbone, Blockchain Association, Jeff Sprecher from ICE or the New York Stock Exchange, and Adina Friedman from NASDAQ. I got to see Adina Friedman speak at the Ripple Swell Conference last year. And then, of course, White House Crypto Council Executive Director Patrick Witt will also be in attendance. But we got a big shakeup taking place with long duration bonds coming back down after the Treasury announces this huge operation that was already started. The U.S. Department of Treasury is increasing by at least double the size of liquidity support buyback operations for longer dated nominal coupon securities. That would be 10 to 20 year bonds and 20 to 30 year bonds. The current maximum size of $2 billion per operation will be at least $4 billion per operation. This change is effective as of September 9th, 2026, and will be in effect for the remainder of this refunding quarter through November 4th. Treasury will provide more information about future buyback sizes at the next quarterly refunding scheduled for November 4th, 2026. Now, pay attention closely here. The increase in buyback operation sizes reflects Treasury's desire to provide greater liquidity support in longer dated nominal sectors where there is consistent strong sponsorship from market participants, as evidenced by the significant volume of high quality offers Treasury routinely receives in longer dated buyback operations. An updated tentative Treasury buyback schedule will be released at a later date. Now, on this news, crypto is ripping back up. Gold and silver are ripping back up because we're all saying, okay, you're going to make the money print. You can call it whatever you want. The money printer for the U.S. government at our treasury there, right? People get confused because typically we think of the Federal Reserve as the money printers. Not necessarily, right? These are at the treasury, and then the treasury is running the bond market, and the bond market is what really is running everything. And so on this news, bonds are down. People are saying, okay, they're showing up. We better show up too. And then we also better get hedged. And this is why gold, silver, Bitcoin, and XRP are back up on the move here today. I'm zoomed out on the daily chart, but you can see Bitcoin moving back up to 66,000. Let me zoom in a little bit closer for you guys so you can see where we sit today. Back up, pushing towards 67,000. I want to make a quick note. Watch these market makers in crypto, though. They like to do us dirty. When we have a day where crypto executives go into the White House, I mean, think in the mind of the market makers. Okay, let's juice up the market, get everybody to come back in, get excited right before they do us dirty. So I'm being cautious here. Like, I don't want to sound and make it seem like I'm like 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 expecting this to have really strong legs, this run that we're seeing right now. Obviously, green charts, we love to see it. It is nice and refreshing, but I'm just kind of remaining a little bit hesitant because I know how dirty the market makers like to play. Ethereum breaking back above 2,000. There you go for you guys holding a bag of the ETH. For XRP, the final bear market low is forming, as I titled last night's live show. If you guys missed it, make sure you go check out that one. But the title was XRP cycle low forming before bull run. And that's what this is. An XRP could come back up here. We're at 104 right now. Nice big green candle on the daily chart. But, still wouldn't be surprised to see this be a fake out, get us all excited for the White House meeting before they pull us out again. So we'll be watching that. But like I said, gold and silver back up. Absolutely fantastic, pushing up to 4,500 per ounce for gold and pushing back up to $66 per ounce and just getting a little bit of support after moving all the way back down to about $55 per ounce. So a perfect bounce off of the previous all-time high. Flip that into support. From a technical standpoint, that's what your TA guru would want to see on the chart. And from a fundamental standpoint, gold and silver have remained as strong as ever, right? But I flip over to the bond market and you'll see what happened today. So the red coming back down is actually positive. It means that more people are coming in and buying that bond. And now we know our Treasury is a buyer as well. QE, but don't call it QE, right? Quantitative easing, but don't call it that. I just say it's a different form of making the money printer go burr. And look at the long duration here on all of them coming back down. Now the 10-year pulling back down here to 4.6. But this reminds me of the currency intervention that we've seen in the Japanese yen, right? We sold off euros to go buy Japanese yen and to bolster the yen. But then that got the yen back down to 155, the largest intervention ever. And then we're back up to 159, 160 level. Let me just check it real quick while we're here. USD versus JPY pairing, we're back down to 158. But, look at all this intervention to get it down to 155. And then it immediately shoots back up to the 160 level, essentially. And we're coming back down here today. So, big movement today. Japanese yen appreciating against the dollar. The dollar is having a sell-off in the currency market, and obviously gold and silver moving back up. This all makes sense while our bond market's coming back down. But once again, we only got our 10-year back down here to 4.638. That's it. This is the problem. You intervene in the Japanese currency market. You make the money printer go burr, but don't call it QE. Now you're going to double the pace at which you're doing those buybacks. That's what this press release is right here. They're going to double the size of liquidity support. Is that a strong dollar? Is that a strong situation? Is that a strong economy? No. And what I find so interesting is the timing of this, right, is we were wondering what is President Trump and Scott Bessent got up their sleeve here to stop the Japan carry trade from blowing up, but then also to get our bond yields back down. In 2025, we launched the tariff war. In 2026, we launched the war on Iran. And I'm not saying that he did that directly to bring bond yields down. It was just a nice side effect. Just was convenient, right? From the tariff war last year and then the Iran war this year, the convenient side effect was bonds coming back down. And we were wondering what's next because they'd started to creep back up and we can't have it. This is where you get 7% mortgage rates again. Our real estate market's already going through a historical reset. And so this bond market, we were waiting. Now we have our answer. The second part of it is stablecoin adoption. That's what will soak up the demand and basically fill in the gap that we need. The Treasury Department is telling us today they're having to fill the gap. They're having to double the size of their liquidity support for buyback operations on long-dated bonds. That means nobody has confidence in our government, in our dollar. Can't blame them. Exactly why we're in precious metals, exactly why we're in crypto, and exactly why we like to do it in a tax-free Roth IRA with my sponsor, iTrust Capital. If you guys haven't checked them out, I'm just going to plug them real quick here. The IRA product for your retirement funds, and you got free institutional grade custody in the PCA or the Treasury account for your business, your trust, your nonprofit, or LLC. It's all free, institutional grade custody, and tax free in the Roth IRA. And what I love about iTrust Capital is they have the precious metals, they have the cryptocurrencies, and they've just added stocks and ETFs as well too. Use my link, fund your account to get that $100 funding bonus. Just yesterday, and I actually missed this. I didn't even cover this in last night's live show because this just kind of went under the radar. I didn't see any tweets on this. It was just a press release here on their website. But this is massive. August 18th, yesterday, Ripple Prime closes $275 million senior note offering. Now, this is on top of the deal that they already did. But here's the rundown. I'm going to do this rundown pretty quickly. This is Ripple Prime. Okay, so this is the non-bank prime brokerage that Ripple built after buying Hidden Road. They acquired Hidden Road. It's now theirs. And remember, they settled $3 trillion last year. $3 trillion in payment, settlement, and volume through their clearing at their prime brokerage here last year. And as I covered on last night's live show, Brad Garlinghouse at Wyoming Salt Conference just yesterday, he's saying that number is going to increase. The $3 trillion that Ripple Prime did, the $13 trillion that G Treasury did, that number is going up, according to Brad Garlinghouse as of yesterday. And the big takeaway, the opportunity gap, is that only 0.1% of that $16 trillion is touching blockchain. We're not on XRP yet. They are still waiting to move most of their flows, that $16 trillion. He said that number is going to increase as well. And every 0.1% that they increase moving to XRP or blockchain, that's 160 billion of settlement that they're bringing on chain. Now they get to grow because they just raised this capital here in the bond market. I'm going to show you. This is $275 million private placement of senior unsecured notes, and KBRA rated the notes at BBB. This is investment grade. Piper Sandler ran the deal. Now, the part that wasn't in the Ripple press release, but Bloomberg reported yesterday from a Ripple spokesperson that the notes mature in 2031 with an 8.25% interest rate. So Ripple's paying 8.25 to secure this debt and to secure this this loan for them, for their company Ripple Prime. 8.25%, which tells me that, Wall Street priced this risk at, 8%. Obviously, they're accounting for some risk here, but they're not afraid to let, to lend Ripple Prime $275 million. But what's interesting about this, what this allows Ripple Prime to do, right? This allows them to grow their margin book. Prime brokers make money lending. So a hedge fund posts collateral, borrows against it, and pays a spread. That lending has to be funded, and you can't lend what you don't have. Clearing deposits. So to clear trades, you post margin at the clearinghouse. That money sits there. It's dead capital, but it's the toll you pay to plug into the system. So all of this allows, it's like a bank that takes in more deposits, right? They can expand and give out more loans. Kind of the same thing with how this, brokerage is set up. And Delta One and Equity Prime Brokerage, this one's straight from KBR. Total return swap, synthetic equity financing, servicing leveraged ETF providers. These are balance sheet heavy businesses, and you can't enter them without capital. And so that's what this capital will go to work for. This is for their prime brokerage side of their business and be able to expand that. In May, Ripple Prime secured a $200 million debt facility through Neuberger Specialty Finance to expand its lending capacity. So after today, we have over $475 million in debt financing that they just secured in the past 3 months. And this is just strength that I see where Ripple has the ability, they have the confidence now. As Brad Garlinghouse said yesterday, they have 150 open roles. So Ripple's still expanding. They're building the base of capital that they have to work with and deploy. And to me, it's just all signs of strength for Ripple, which will correlate to strength for the XRP ecosystem as a whole. And I want you guys to understand that this is what you want to see during the depths of a bear market is being able to look at a company like Ripple, being able to look at the Q2 report that we just broke down on last night's live show and all of the data that confirms RWA tokenization up, stablecoins up. A lot of the payment volumes and transactions and active wallets and users, that was all down. Typical bear market. So on those metrics, it's all down. And, you'd be saying, okay, well, why are we still here in XRP? For me, every day, I mean, this press release missed my radar yesterday. And that's just another prime example. I live this every single day. In a major development like this, and it just slips under the radar. It's not being talked about in mainstream crypto. And mainstream financial news barely even talks about crypto. If they do, it's Bitcoin and maybe a couple other little deals. But nobody's talking about this, right? And this is the infrastructure for the new financial system. Ripple's been laying it. They've been acquiring it. And now they get to move it to XRP, which for me is the big opportunity gap. Why is XRP at $1? Because Ripple hasn't been able to move the institutional flows to XRP yet. And that's all coming. And I want you guys to stay around. Make sure you have subscribed and hit that notification bell, because the next interview that I'm dropping is with Chris Dangerfield. And he is specifically from a developer, an engineer, and builder who is not tied to Ripple, to have him break down and explain the XRP Ledger amendments and the programmability that's being added here, about how it's all for institutions to use the XRP Ledger. That's what's happening right now. We love to see it during the depths of a bear market. It gives me conviction in still being here in XRP, and it's the benchmark and standard that I compare every other crypto investment that I'm making to right now. I compare it back to XRP, the crypto. I compare it back to XRP, the ledger. I compare it back to Ripple, the company. You guys let me know in the comments down below what you make of this. The Treasury clearly having to step in as a little lender of last resort, and apparently Ripple ready to expand their operations and continuing to see further growth there at Ripple Prime. Let me know, and I appreciate your support. We'll see you guys in the next one. Everything else is at my website, zachrector.com.